tutorial, I'll be going through with a stock called Citrix Systems Inc. Just type it in Google, press enter. You can see the full name of the stock. You can see the symbol. 91.98 US dollars cost of one stock right now, and it's a billion size firm. It's a big size firm. That means that it's a big size firm. And if you see the dividend yield, it is paying dividend. That's a brilliant sign. Don't be worried that the dividend is very less. It's 1.5%. That's not a lot of dividend. Or even if it was paying dividend less than 1% or less than 0.5%, that's a brilliant news, because that means company is financially very strong, because after paying the creditors, loans, costs, and everything, they still have extra money. That extra money they pay to shareholders as dividend. So that means they're financially doing very good. They're very strong financially, which is brilliant news for a firm. So even if the yield is less, that yield represents um, or reflects that the company is financially very strong. That's a brilliant news. Let's go to Wikipedia and see when was this founded. You can just search this box. You can see founded 1989. Now what I'll do is I will just copy this exactly from Google. I'll paste in Google. I will say Indeed. I will say reviews, and let's check out the reviews in Indeed. And I can see that we have 504 reviews, 4-star, and I can see that please read through the reviews yourself, check out the salaries, the jobs listed, and everything. And then I want to see the reviews in Glassdoor as well, which is a very important website for reviews from employees. And I can see 2.6k reviews, 2,600 reviews. It's 3.7 star. Check out the jobs listed, the salaries they're paying, the notification, the benefits they're giving, and the photos. Read through the reviews yourself. Check out Just Your Patents. And I'll just paste it here. And please check out the applicant or assignee, because these are people who have full rights of patent. I can see their patents in 2012, 13, a lot of patents in 2012, and so on. Please look for recent patents in 2014, 15, 16, 17, because that means they're still innovating. That what we want in 2017. That's a recent patent. That's brilliant. And check out the patents. Go through yourself the next patent, everything, and that's brilliant. The more patent a firm has, the more stronger it is, because it's harder to beat that firm because it's innovating. Let's go to Yahoo Finance and check out the key executive salaries and what they are getting. So I'll just paste it here, and please click the symbol from the Nasdaq, CTXS, and I'll go to profile, and please see the sector, industry, and employees here. That's all the information. And I can see that they have 5 key executives. Only one of their salary is not shown. 4 salaries are shown, one is not shown because it says not applicable. That's something to find out, why it's not shown, why it's not applicable, because we need all the salary information, because there's more transparency and we can build trust. So you need to search the reason behind that. And now let's go to macro trend and see the price ratio. Click price ratio, price book ratio, and paste in the symbol. Symbol, I will just search CTNX. That's the symbol. Actually, I forgot that. Yeah, that's the one. CTXN, sorry. XS, sorry. So I'll just explain you briefly what price book ratio is. If the price book ratio is less than 1, that means stock is cheap, it's undervalued, and it's at discount. And if it's more than 1, that means stock is expensive. The higher the number goes, the more expensive it gets. Let's have a look. Right now, I can see that it's 23.62, which means that the stock is 23 times more expensive to buy right now. If somebody buys right now, they'll be paying 23 times more money. If somebody bought in 2018 September, they paid 19 times more money to buy the stock. They paid $110 to buy something that was only $5.5 worth. They bought it very expensive, but right now it's 23 times more expensive. And then I can see, I think the cheapest it was in 2009 March, when it was 1.6 times more expensive. Somebody who bought in 2009 March, they paid $18 to buy something that was $10 worth. Now let's have a look at other ratios. Let's have a look at current ratio. If current ratio is less than 1, that means stock is risky because liabilities are more than assets. If current ratio is more than 1.5, if it's 1.5 or more than that, that means stock is very safe. It has a good margin of safety. Let's have a look. Okay, right now I can see that its current ratio is less than 1. That means that the stock is very risky because if you see vertically up, liabilities are more than assets. Stock is risky. Let's look at the previous trend. It is consistently since 2018 June up till now, consistently it's less than 1. Consistently liabilities are more than assets. It's very dangerous. I want to see just once. I think it was more than 1.5. It was safe, but there's no consistency. It's just once, and I can see that hmm, I can see that since 2005 up till 2005 up till 2007 September, it's 1.5 or more than that. So it's a safe stock, but there's no consistency. It's for a short period, and since then, since 2007 December up till now, consistently it's below 1.5. So it's a very risky stock. Let's go to debt equity ratio. I'm looking for 0.5 or less than that. Debt equity ratio will tell me if the stock is mainly operating on debt or equity. Let's have a look. So please look for 0.5 or less than that for it to be very safe. Okay. Right now, I can see debt equity ratio. I'm looking for 0.5 less than that. It's a lot more than 0.5. That means stock is very risky because you can see vertically up. Debt is a lot more than equity. That's dangerous. So it means companies mainly operating on debt instead of equity. That's dangerous. Let's look at the previous trend. So it's consistently more than 0.5. So it's very dangerous stock. I would say that since 2014 June up till now, consistently it's a very dangerous stock because it's always been more than 0.5. In terms of debt equity, let's go to return on equity. I'm looking for 8% or more than that for it to be brilliant. Let's have a look. Okay, I'm looking for right now it's more than 8%. That's a brilliant return. It's more than 8%. That's what I'm looking for. But it's below 8%. There's no consistency of being more than 8%. Like I'm looking for recent 5 years at least. So it's a minus return and then there's a positive return. So actually, I can see since 2005 up till 2017 September, it's consistently giving me 8% return or more than that. That's brilliant. But just recently, it's a minus and then it's a plus, and then it's I can just forgive the ones off. I think overall, it's doing very brilliant.